Welcome back. In this video, we're going to go over one of the easiest technical indicators there is when trading, and that's the ABCD chart pattern. We're going to go over when to use it, why to use it, and how to use it. So let's go to the computer so we can easily show you. Alright guys, here's an intraday chart of Occidental Petroleum. I chose this chart because it's going to allow me to draw a pretty clear picture of what an ABCD pattern actually looks like on a chart. So the first thing we're going to do is I'm going to show you where point A, point B, point C, and point D are. So it's important to remember that your point A is the starting point of your move. Point B is your new intraday high. Point C is your new high or low. And point D is where you want to start looking to take your profit. So when locating a point A, right, you're going to start right here, and your next point, which will be point B, will be your intraday high, which will be right here. So now we have A and B. Profit takers will look to take profit here at point B. So you're going to move from point B to point C, which is going to be a new intraday low right here, and then you're going to move from point C to point D, which will be, according to Fibonacci, you'd want it somewhere around 161%. So now we have point A, point B, point C, and point D. Now if we draw our Fibonacci, we'll be able to clearly map out exactly where the pullback would be. So we would, if we were to draw our Fibonacci from this point to this point, from point A to point B, we would be looking for point B to point C to pull back to about 61.8%, which you can see it did here, which would make this pattern valid. So when moving from point C to point D, you're going to want your Fibonacci to price level to go about up to 161.8%. So if you see here, it just crested above 161.8%. But here's a few rules that's pretty important, okay? So when you're mapping out your point C, okay, which is where ideally you would like to buy, which would be in this region here, which would be right in this region here, okay? Now the rule for point C is it cannot be below point A, which is right here, okay? And then when putting your stop loss in place, you're going to want your stop loss level to be at or right below the level of your point A. So in this case, that's 58.84. So you would want to place your stop loss slightly below that at 58.82. That's where I would place my stop loss. And then when looking to take profit, you would place your stop loss again, like I had showed you, around the 161.8% level. And I always place my take profit right below that, because that's when just about every other day trader playing this pattern is going to start looking to take profit. But actually on this chart, I would have already exited this trade. I would have seen the new 5-minute candle open up red here, confirmed it with another red candle. I would have took my profit right here at this trade, because in my mind this chart would have been busted. It did make another move a little higher, which is okay, but I would have been comfortable with my gains from point C to this point D right here. So now here's what I love about the ABCD pattern so much. It allows you to have a maximum amount of reward as opposed to your risk. So if you were to enter this trade here at your point C, so that would be at 59.05, and then you placed your stop loss at slightly below point A, which is 58.84, you'd place it at 58.82, maybe 58.83. You're risking 20 something cents for a return of, if you exited after you seen this red candle open up and confirmed it with this red doji, then it closed at 59.58, so you would gained 52 cents in this trade per share, as opposed to risking 20 something. So you had a 2-to-1 risk to reward ratio, which was beautiful, and it's a perfect trade. Now the ABCD stock chart pattern is great for new traders to get familiar with and get comfortable with, because it's very easy to spot. It has a great advantage of limiting your risk by having a clearly defined level. If you place your stop loss just opposite of your point A that you mapped out, the beginning of the move, then you will limit your downside while being able to maximize your upside. Now, many day traders use the ABCD stock chart pattern because it occurs so frequently, it's so easy to spot, and it has such a defined level of risk involved with it. The ABCD stock chart pattern is a great tool for new traders to get familiar with. The more you look for it, the more you use it, the more efficient that you will become with it. You'll eventually be able to see it without having to draw your trend lines. Combine the ABCD stock chart pattern with your level of resistance, your levels of support, your RSI, and the ABCD stock chart pattern can be very accurate. Well, I hope some of you guys out. Don't forget, leave a comment, hit that thumbs up. If you haven't already, hit the subscribe button, and there'll be 9 more videos coming after this going over many other different stock chart patterns.